All right. Welcome. Thanks for joining us today. Today we are here on the WLG Coffee Chat with Terri. Terri is one of our favorite people because she helps us so much. So Terri's a CPA, and she graduated from George Mason University. And she has extensive experience with businesses and individual clients in a wide range of professions. That includes retail, automotive, medicine, nonprofit, education, lawyers. Her understanding of tax and accounting and finance allows her to really help clients grow and thrive. Terri became the principal owner of Almacy & Company in 2016. Many of her clients have been working with her for over 30 years. And, the business is local, small, which really helps clients get, I think, the best service and best advice. Mm-hmm. So, Terri, thank you for joining us.
Thank you so much for having me.
So this is a time when I think everyone starts thinking about taxes, or maybe they should start thinking about taxes. I'm not sure till recently. I would start till February or so. But as all those things come in the mail, right? All the notices and all the different tax forms. So, Terri, what should people start doing now, preparing for tax season?
Well, this time of year, I like people to take stock of what they anticipate their tax return to look like. So for some people, it's pretty straightforward and simple. They have a W-2 or a couple W-2s in their household. They might have retirement income and Social Security. Just depends on where they're at in life and what their situation is. Some people who are fortunate enough to have investment accounts may find that they don't get all of their information as early as those other pieces of information. W-2s and some basic things are all out by the end of January, but other things come a little bit slower. Some don't come until March. Sometimes you get a statement from an investment account, and then 4 weeks later, 5-6 weeks later, they send out a corrected version. So it can be tricky. And for those people who have businesses or are partners in a business or owners in a business, that sends them a form called a K-1, which I know you're familiar with. They may not get that. It is due in March, but can be extended until September. So I actually have a lot of clients that go on extension every year because they do not have all of their tax information until sometime after mid-September each year. And then they have to file by October 15. So what you're looking at really depends on your situation. But this is the time of year to start thinking about it and really to think about, can I handle this myself, or is it time for professional help?
Yeah. So tell us a little bit more about that, things to think through on that, right? When do you need professional help? When is TurboTax sufficient?
Right. Or even, while in your discussions too, like what's the difference between a private firm like yours and just, the Statue of Liberty on the corner that's prepare my taxes here? Like, what's the difference?
Sure. So let's first talk about when you might need help. When you might need help is when you're not comfortable doing your taxes. Some people, it doesn't matter if all they have is a W-2. They really are not comfortable filling out a government form and saying, this is correct. I swear under penalty of perjury that this is a complete and accurate representation of my income for the past tax year. Right. So that freaks a lot of people out, and they don't feel comfortable with that. So your own comfort level is one thing. The other thing is, obviously, if you feel like you're not sure of how to handle a situation, or you feel like you may not be taking advantage of some tax rules and deductions that would apply to you. So those are the reasons to seek help. The kind of help you can seek there's a wide variety out there. Do-it-yourself programs like TurboTax can be fine. They typically are completed by answering a series of questions. Do you have wages? Yes. You give them the information for your wages. You fill that in. Do you have any interest income? Yes. You give them that information. That's the way it works. I have seen people truthfully answer questions and put in information so that they get the wrong result. And this is because those questions are designed to be very simple and straightforward, which is wonderful. But if your situation is not simple and straightforward, the program might not understand. So a very common thing can happen where you say in one of the questions, do you own a home? Yes. Do you have a mortgage? Yes. Enter your mortgage interest. Done. Further down the line, do you have a rental property? Yes. Do you have a mortgage? Yes. Enter the mortgage information. Well, if that rental property is included in your personal home, like you rent out a basement apartment, you just double counted your mortgage interest expense. So this is something that people who are not familiar with tax law don't understand, and they're not able to catch because they honestly answered the question the way it was appearing to them. So that is a pitfall of those kinds of programs. So then if you decide, well, maybe I do need a little more hands-on help, you can go to a number of franchise locations with this Statue of Liberty or whatever they do, whatever they have, somebody running out in the street waving at you as you drive by, get your taxes filed here. The people that you see there have been trained to prepare a tax return. The training depends on the company they're working with. I have known of companies that provide 3 whole days of training in how to do a tax return. A little scary to me as a CPA who had to take extra classes in college to sit for the exam, had to work for 2 years before I was eligible in Virginia to get my license and pass a test. In those days, it was done the old school way, and I had to go to a conference center. It was given twice a year, and it was 4 days of testing. So that's, no calculators, by the way.
Oh my God.
It's on paper. Yeah. So that was way back in the 80s. I know that was decades ago now, but it just is something to be aware of because they won't tell you that in the advertising.
Mm-hmm.
So it's a little bit of buyer beware, and it's also a little bit of you get what you pay for. It doesn't necessarily mean that they're cheaper though, which is another interesting side point. But keeping away from the cost of it, you also need to keep in mind that most of those places, the people that work there close up shop the day after tax season in April, and they're gone. And if you have to go on extension, you might be out of luck. If you have questions after filing your return, you might be out of luck. If you get a notice, you might be out of luck. It's kind of a crapshoot whether you're going to get somebody or not, or whether you're going to find somebody to help you that represents that organization. We are a year-round company. We are here way more than 5 days a week, all of us. And so we try very hard to be responsive. I think that's one of the things with a smaller firm. We pride ourselves in that, and we try very hard to respond to the many emails and phone calls that we get. It's not always easy as we approach a tax deadline to do that, but we really try to be responsive, and we don't mind being asked questions like, well, why is this deduction this, or what else can I deduct? I just got a new job. How do I fill out my forms for withholding? Those are the kinds of things. We're selling our house. What do we need to know? Yeah. That's where we like to provide extra responsiveness and extra time that we don't really include as a separate invoice, but we kind of roll it all into our tax package of our services.
She's also very good at answering my ridiculous questions of explain it to me like I'm 5. I don't understand why this number is this number.
Next time I'll just have your daughter get on the phone instead.
You should. She'd probably understand it better. But no, they are very good at explaining things.
Yeah. So, well, and having those questions, right? And being able to have someone to answer questions, being able to, reach out to and say, hey, I have a question, rather than calling a number and having no one answer, or being able to reach out to the same person. We talk to people a lot about the similar things, right? You get what you pay for. You Yes,
right?
you can fill out a form, but you don't know if it spits out in the end correctly. And that might even be, I think, more true with taxes and being able to read tax forms. At least estate plan documents come out in English, right? Written.
Ish.
I'm not sure what language tax forms are, but
Yeah.
yes, they try to be English. But understanding tax law is extremely complex.
Mhm.
I know each of you have seen what a tax law book looks like with the code. It's 3 inches thick in paperback, and it's always changing.
Mhm.
There's always something new going on. We have a new administration, so we don't know what's going to happen in the next couple of years. But several current tax rules are supposed to change at the end of 2025.
Mhm.
So they'll be different for tax year 2026. And it's a little bit of a crapshoot all the time.
Yeah.
I've unfortunately or unfortunately been around to see a lot of different changes. And I always get a kick out of the occasional client who still thinks some old law still applies. One I hear most often is that if I sell my house and I use the proceeds to buy another house, I don't have to worry about any tax. And it used to be that if you sold your house, as long as the next house cost more than what you sold the old one for, you didn't pay any taxes. So you kind of rolled that gain forward and you kept rolling it. And people had to get concerned when they reached that age of downsizing and moving into something smaller, because now they had all these gains from houses that they no longer had rolled into the gain as they sold the final house and downsized. So that was changed way back. Well, Ronald Reagan was president. So it's been a while. And that was changed. But I still, every once in a while, have someone say to me, well, it's okay. You don't need to worry about the sale of my house because I bought another house and it cost more. It's okay. We'll get it done. Maybe you don't have to worry about anything. Maybe you do. We'll find out for you.
It depends.
It's a whole, yeah. I feel like the whole tax business is just very similar to what we do. And there's a whole lot of it depends. And it's a whole lot of like, it really just is a very personal experience, and it's not cookie cutter.
It is. It is very personal. And most clients have some little nuance that makes their return different than even very similar clients. Just like you have, where if you're writing a will or a trust, there are going to be differences. It's similar, but it's not quite the same. And you have to know enough to understand what works best for that person.
Right.
And sometimes you have to make changes and adapt.
Yeah.
Yeah.
So, Terri, tell us a little bit about keeping files and how long do we need to keep things? And I've got boxes in my office because my husband thinks we need to keep everything. So.
Great question. And I've had a lot of questions recently about people keeping their receipts electronically. So they're taking photos of or scanning receipts and keeping them that way, which we all know is great for those receipts that fade over time. So that's good. So it really, again, depends on your personal situation. I tell everyone to keep their tax returns, period. I just think it's a good thing to do. But the IRS considers the last 3 years to be open. So they can go back 3 years, not counting the current years, the way I look at it. So if you don't want to keep everything, and I do think a lot of people today are keeping things digitally, and that's fine, but you might want to not just keep that on your computer. You might want to drag it to a thumb drive or some kind of backup program so that you have it a little more in case something happened to your computer. When clients tell me they just want a PDF, I always wonder a little bit how they're keeping it, because we all know how computers can crash. And so are they keeping it on a cloud, or are they keeping it on a physical backup? But somewhere you should be able to get to that information. Anything that you purchase that you still own, I'm talking big purchases like your house, you should keep the documents as long as you own that property. So if you buy a house, keep your settlement sheet and your little package that you get on the day of closing. And in that same file, you might want to throw any major records of major improvements you made to the house, because that can all come into play down the road when you sell the house. I always recommend keeping those as long as you own the property. Once you sell the property, you're free to get rid of it. Most documents for individual tax returns can be disposed of after 4 or 5 years, but many of us, including me, will say 7 years. It's just a little bit of cushion because people get a little confused when you say 3 years, what we're talking about. We are currently in 2025, but you haven't filed 2024 yet. So right now, I mean, keep the documents for 2024 because you haven't filed, but also 23, 22, and 21. So I'm going back further than what I'm saying. So this is why we add on a little extra. If you have an unusual situation where you think you might have a problem with the IRS for some reason, maybe something happened on your tax return a few years ago and you didn't get the best advice, and I hope you weren't my client, and you think there's a problem there, I would keep further back. The IRS can always ask for more. So they can go back 10 years, basically, if they feel like there's something that was done wrong. So if you think there's a problem, then keep it. For businesses, it's a little different. For businesses, I recommend keeping at least 7 years. And the documents you keep are the documents that can substantiate your deductions. You can keep the ones that substantiate your income as well, but usually the IRS already has that information or a lot of it because of the way your income is recorded. They never say you recorded too much income, by the way. So what you're really thinking about is your deductions. So you want to keep those receipts or records. And if you're using an online bookkeeping program, you may have the ability to scan your documents, your receipts, and put them right into that program, which is great. That's one way to do it. I'm kind of old school, and I keep an alpha file with my paid bills in it. So I have everything alphabetically. If you're a kind of business that pays a lot of bills every month, then you might need to have a file for each vendor. It just depends on your situation. I'm able to get away with less than that.
Yeah.
If you have payroll, you need to keep your payroll records, including your personnel files going way back. And you should talk to your payroll provider about that because personnel records need to be kept quite a while. And I don't know how long to wait after someone has left employment that you can get rid of those, but I wouldn't do it right away because things happen and you get disputes and they say you owe them something more and you have to prove that you don't. So it's difficult when we have still a lot of paper in our lives. I know everybody would like to be paperless. I struggle with it too. I have a shredding company that comes each year to our office to shred the oldest year that we're getting rid of, which would be the 8th year. So we keep 7 years of everything that we have. So,
well, that is really helpful to know, and especially as folks start thinking about, updating their files.
Right. Please shred. Please get things shredded. Don't just throw them away. If you can't burn them or something, get them shredded because you don't need to lose your information.
Yeah.
Your own security is important.
Yes. So what inspired you to become a CPA?
Oh my gosh. Funny story. When I went to college, business or engineering was sort of like the hot thing if you wanted to make money, go business or engineering. And I knew I wasn't cut out for engineering. I went business, had the intentions of going into marketing and majoring in marketing at my school at Mason. And then my junior year, I took accounting and I kind of fell in love with just the symmetry of it. Accounting is very balanced, very symmetrical, and it really appealed to me. And I had a great instructor, and I said, you know what? I think I could do this, and I like it. I should change my major. Well, everybody who's been to college knows it's not great to change your major at the end of your junior year after taking Accounting 101 and 102. I had a lot of catching up to do to get my major in accounting before graduation. And I did have to go summer school and all that to get it all done. But I did it. And I don't know how I somehow in school, they never really talked about tax firms and tax deadlines. So I ended up going to work for a CPA firm right out of college and found out what it meant to do taxes and tax deadline. So I had learned a lot of, in school, you learned a lot of tax theory and rules and regulations, but you didn't actually practice filling out tax returns. So my very first job, we were still doing tax returns by hand. This is how much the industry has changed since I started. And before I left that company, because I was relocating to a different area, I was assigned the duty of being our central person to manage our returns that were being processed by a data processing center. The data processing center's name you'll probably know. It's ADP. They no longer process tax returns. They do payroll now. But at that time, they were a processing center for tax returns. And the whole issue was the tax preparers in the office filled in forms, and you had to fill in your little boxes, you know, with your number 2 pencil and write your numbers in little blocks. And then we sent it off, and they would create the program and run the tax return and send the return back. If there was a problem, my job was to go through the return and what was sent to the company to see if we made an error on our input or if they made an error, to see who was going to pay for the rerun. And so that was a big introduction to the world of computers and the current way we do taxes. But all changed now, you know, it's all better. It's much more instantaneous, and e-filing and everything has sped that process up. I remember having to take returns to the post office and midnight on April 15, that kind of thing. So the younger people who work for me have no idea what any of that is like.
Yeah. So
Showing my age.
well, I mean, it sounds very similar to law school, right? You don't
Mhm.
law school, you learn theory, you don't actually learn how to be a lawyer. And when I pre-estate planning, right, and doing a lot of SEC work, we did a lot of back and forth. Part of my job was double checking to make sure the printer did things correctly.
Interesting.
Did they make the edits they were supposed to in the filing that had to be done with Edgar?
Right.
So, yeah. What, if you could give folks one piece of advice going into tax season, what would it be?
Try to get your stuff together early. Don't wait till the last minute. It's if you need help with a professional, it's going to be harder for them to get it done timely, because believe me, all of us are deluged with information by March. And just last year, we had a client who sent his information on April 6th, and one of my staff members said, we'll do our best, but you may be going on extension. And his reply was, well, mine's really easy. And she said, it's not that yours isn't easy enough. It says there's 200 people ahead of you. So please start early. That way there's time for a thorough review of your information to make sure we have everything and nothing's been forgotten or missed. Procrastination in this regard is not your friend. And I'm a big procrastinator in my own life. So I understand, I get it completely. But the sooner it's off your plate, the better you're going to feel. So it makes everybody's life easier. And if you're one of the ones that has to go on extension, don't be worried about it. There's nothing wrong with it. And I've had people say they're afraid they're going to get audited because they went on extension. I've never seen that to be true. I have some clients who say they think they're less likely to be audited if they file on extension. So I've never seen it happen either way. There's no clear evidence on that. But it's something you can do. It does not extend the time you have to pay your taxes. If you think you're going to owe for tax year 2024, you need to pay that with an extension payment by April 15. If you don't and you're short, you're going to be hit with more penalties and interest than you would by filing later and paying later. So save yourself a little money. And a good rule of thumb is to look at your prior year tax return, see what your total tax was, and then multiply by 110%. look at your withholdings that you have or tax payments that you've made and subtract that and pay the difference. Get yourself covered. I'd much rather have everybody be covered and then have a refund or overpayment instead of getting a lovely little notice that says you owe more for interest and penalties.
Yeah.
Okay.
Definitely. All right. Last question. What's the one item you couldn't live without in your day-to-day life?
My computer. My 3 monitor screens. I can have the current year tax return, the prior year tax return, and the documents that have been scanned all in front of me at once. So my three monitor screens.
Perfect. All right. Well, thank you so much, Terri. We're glad to have you join us.
Thank you. I enjoyed it.
Fun.
Happy tax season.
Yes.